Good morning. Wednesday, March 17th, St. Patrick's Day. Happy St. Patrick's Day to everyone, and happy St. Patrick's Day to you, Austin.
Happy St. Patrick's Day, Andrew. How's it going today?
It's a good day. As all days, there's something valuable to be learned. Today is a special day. Unfortunately, I have no green on, which is sad, but I just don't have any green. It's great. It's terrible of me as being an Irishman not to own any green, but I digress. Big day in the markets, lots happening. As always, I love the fact that this reminds me of way back when I first started at Merrill Lynch. It was the big kind of internet bubble or craze that was happening and shift whenever people started using the internet really took off and people were starting to see how they could apply things and what would work, what wouldn't work. There was a lot of hyper growth, incredibly insane growth, and of course, lots of hyper failures. Which to no doubt we'll be seeing that as well. But it reminds me of that period of time because there was such a frothy, robust interest in the market. And we see that now with a new generation of young people that have a strong interest, not only for the lulls and for the laughs and for various reasons, but also they have a strong interest in finding out about how to invest. Unfortunately, we seem to have lost Austin there for a moment, but hopefully we'll get him back here. Oh, there he is. So, hi, Austin.
Sorry about that there, Andrew. I think my house just lost power for a second.
Wow, holy cow. Okay, but you're okay.
Yeah, everything just turned off and then turned right back on quickly, so we got it back, but...
You're back, you're live, good. All right, so how are things with you?
Good. It's I'm sure you were mentioning, it's an interesting day around the market. We're expecting an update from Federal Reserve Chair Jerome Powell later today, which should have some movement in the markets, kind of regardless of what he's going to say. It's being built up as the stock market March Madness, if you want to kind of equate it to the big sporting tournament that'll be starting soon. But yeah, it's interesting, kind of hanging on his statements surrounding interest rate and bond yields. Essentially kind of looked at as it's going to move the market regardless of what he says, but it should give a clear indication of where the U.S. economy's outlook is going to go, at least for the next several months.
I think without predicting and being too far off, this is quantitative easing 42, and everything's fine. There's no inflation. The economy's looking robust. Everyone should just invest. I'm imagining that's what the statement's going to be. But hey, I'll take it.
Send your $1,400 stimulus check straight to the stock market.
Yeah, let's go to the moon. You know what? I laugh a little bit, but to be honest, I would prefer that message than the more realistic that, listen, we've just spent $5.9 trillion. Let's keep on pretending we don't have inflation. But we've spent trillions already, trillions more to come. But the one thing to keep in mind is that, as I mentioned, there's going to be sectors that get decimated. There's going to be ones that are trying for the moon and fail. But there is no doubt, because they've been telling us for years what their plan was. There's going to be trillions spent in specific areas, mainly focused around energy, which means all of your clean tech, green tech. How can we establish a greener approach towards energy? So if you're looking in those sectors, which means mining, then you're going to at least be buffered against some of the craziness that comes with massively overvalued companies that are out there right now still today. Yeah,
absolutely. Completely agree with you on that.
But it'll be interesting to see what he says, because like all things, the market requires tools and PR and advertisements and their own market metrics and everything else in order to help influence the market in certain directions. And there's certainly a lot of people that will just believe whatever is said by whatever government official or Federal Reserve official, which is not, government, that's a private company. And neither federal nor reserve, as most people know. They'll just accept whatever the person says, and they'll just go ahead and trade off that. And that's fine. So that whenever I talk about a market model mindset, you have to decide what yours is. There's enough people that trade on that information knowing that most of it is not terribly accurate. There's others that would believe entirely that it's absolutely truth. And in a weird way, both are right, because you can trade off of both of those platforms under that same total disagreement and still be able to make money, which sounds contradictory, but once again, it's do you have a system in place? Do you have a model that you are using, and are you testing a thesis and a theory in order to get feedback or to get evidence or to see if there's any kind of pattern, if there's anything emerging from that? And that's one thing I like to hammer home to, because people always ask, well, you always say, what do you mean by a model? What are you talking about? And it's just like anything. If you're going to build a house, do you just go, oh, let's just put up some walls here and see how it goes? You start with plans and you build it out, and you contact the right people, and you talk to an architect and say, hey, can we build on top of this ground? Say, no, that's not ground. That's muddy, or that's swampland.
That's a marshland.
That's a marshland. That's not a great idea. So I like to just kind of chip in on that today when we're just talking about some general ideas and general stocks out there. And while we're doing it, we can kind of jump through a couple ones that have garnered a lot of attention, and some of my favorite. Desert Mountain Energy has really pulled up over the last 10 days. We did a video with them, I'm going to say 9 days ago, and since then it's been marching steadily ahead, up to about $3 right now, which is outstanding. And also that was buoyed by, there's a large website called Simply Wall Street. And I'm going to try to contact them as well, because I'd love to have a chat with them. And they've covered Desert Mountain before, not as favorably, but they've certainly changed their tune. And they have put a price target. I'm even hesitant to say the price target because I'm not a CFA and I'm not allowed to make predictions. And even if I'm saying someone else's predictions on there, I want to be very, very safe. But let's just say that double-digit number is pretty high. So please go check out.
They've considered the stock as heavily undervalued to the tune of 80-some%.
I think I can quote them as saying it was 90% undervalued without giving a price. So that has kind of sent me into a bit of an alarm, because this publication has a ton. Has a ton of reach, and is fairly well known. And they go into some detail in regards to how they got there to some extent. And hey, listen, I'm a huge fan of this stock, but I would love to know exactly how they got there. My one concern is that you put a price target so aggressively high on the stock, people start buying it, push it up, and then if the company doesn't deliver their expectations, not only on time, but faster to get it to where it should be at, then people start thinking, oh, is this a pump and dump? And this company is 100% not that. It's a real company. It's a real business. It's huge potential over the next years and years and years, that I don't like whenever I see someone pushing a price target that seems very high very quickly. It almost makes management think, oh my God, we have to hit our targets so much faster to meet that expectation of a number. But it has had some effect, I would assume, but certainly not a massive effect. It needs to be addressed, because it is an aggressive number, and that's coming from someone who is absolutely committed to this company long term. So what were your thoughts?
Yeah, I think you were absolutely right. You kind of touched on it there. It's extremely important to have outside money coming into the market, and when you see something like this pushing up, you're going to get investment from people who don't necessarily look at the junior mining market the same way you or I would. It's important to get that outside money flowing into it, but it's also important that these people understand the model of the company, their outlook, that they should be invested in this company for long-term gains. So realizing that, yes, there's huge potential, because a lot of people, myself included, do think the stock is undervalued. That's a great opportunity for a lot of the retail side of people, but you have to also remember, whenever you're getting involved in anything like this, get involved with a company that you like, a market that you can get yourself behind, a vision that you sort of believe in. And that's the awesome thing about Desert Mountain Energy, is it's now got both going for it. So hopefully it can continue to sort of ride that wave of momentum.
Yeah, excellent. Now, I think, and I want to touch on a couple stocks here too, because I don't want to be on all day, but Copper Bank, there's two copper companies I like to follow, and I always like to talk a little bit about mining, and I think we all understand the critical need for copper for this electric future. Copper Bank, I mean, the spokesperson, or Mr. Dr. Copper, Mr. Copper, whatever you want to call him. There's a Mr. Copper and a Dr. Copper. I can't remember which one Gianni is. But listen, if you want to find someone who knows everything about copper for the last decade, Gianni is the person, and Copper Bank is the company to play. That's why I like it. We love it. It's a long-term buy because this is not a trend. This whole shift in energy is not a trend. It's not just a lark. And that and Bell Copper are the two copper companies for different reasons that I am a big fan of, and I want to touch base on because Copper Bank did a big presentation this past weekend for Cambridge House. And then, of course, Bell Copper, which is a very technical team. Sometimes people get lost in that because it is so technical, but their fan base are pretty strong. They're onto a big porphyry system. They are drilling Big Sandy right away here. So that was just an update that came out in the news today. So there's lots happening, and having secure supply to especially Western markets of copper is definitely critical.
Yeah, it absolutely is. I couldn't agree with you more. And those are, if people are kind of looking into copper, realizing the huge potential that there is in that market, these are two of the best companies to get involved in. I really can't stress that enough. Bell Copper and Copper Bank both have fantastic strategies, fantastic management teams around them, and just kind of a great outlook if that's the sector that you're interested in, which I really think you should be.
Absolutely. Well, even if you're not interested, then I'm not doing my job good enough because I need to get people excited about copper. And I know it's not easy. People have a very hard stop when they hear about mining because they're whatever school they went to. Including when I was young, was mining is terrible on the environment. It's awful if this is that. And then when you get out and you start to realize how the world works and how everything that we have comes from mining, you realize that the rate of incidents are very low compared to the amount of mining that's going on. You realize that yes, especially in the West, we have it so heavily regulated now. It's a different story than a very kind of juvenile story that you hear, say, in high school, when you're very impressionable about how energy and how the world operates and how this whole electric world, this 5G city of the future works. So it's a big mountain to climb, but my hope is to reach out to people to educate them about why we need these metals and how mining is critical towards the future. Not only for energy, but even if you just want to do your crypto mining, you really have to actually mine. So another company that I think you wanted to kind of bring us up to date with, and we're having them on again soon, is MVMD. And I see Vincent in the chat is inquiring about what's going on, what's happening with MVMD.
Yeah, well, MVMD is continuing to battle along, to sort of say it. It's fighting through the short selling attack. It's such an interesting situation. The stock is moving all over the place a bit today. It shot up early. It's coming down a little bit now. I think it's down about 6% or something like that. I think we can expect to see it doing similar things over the next little while here. But, for me, if I'm looking at this from kind of my personal investing model, I think this is a great price to get in on it at. Because, it was touching highs of north of 220 early in the month, and now we're sitting down at 156 or 155, whatever it's sitting at right now. To me, I look at that and I say that's a great price to get back in. They did just announce some more news last week about moving some clinical trials, so they've still got exciting news coming out. I still think it's a great stock for people to look at, and a great company doing great things.
Yeah, no, I'm glad you brought that up, and we'll have Brandon on, I believe, on Friday. We're hoping to nail him down for Friday, and possibly someone from the company. That's what we're hoping to have, someone from the company come on as well. I know it's tough because they have so much news coming out and there's so much happening. Also, because of so much activity, it's tough to want to get in front and send someone in front of there, especially live. But anyways, we're gonna do our best to have someone on and get an update. My 2 cents, they halted the stock. And it was halted for, I think for about an hour and a half before close. They then came out with their announcement of the clinical trials on animals or animal husbandry in Bangladesh. I think the market maybe was disappointed. That's good news. It's not bad news, but they may be hoping for a big a big news release to set this thing going forward. So it may have given a little bit more ammo for the shorts to give a bit of a pushback. That's my 2 cents worth. Once again, we'll have Brandon on. We'll get more of a more reasoned approach from him because he follows it so well, hopefully on Friday. So that's another one that we like to chat about. It's very interesting. And before we go into QU Media, which is one that I see having exceptional multi-year growth, maybe you want to just touch on GameStop, because we like to chat about that one too when we get a chance. And what's happening with GameStop today?
You know, GameStop is still there. There's so many different narratives around it, and it's such a difficult one to gauge because at this point, you know that it's no longer just simply that retail movement anymore. There are major hedge funds involved in this battle, digging their heels in on both sides. There are those that have doubled down on short positions. You have those that are trying to take out other hedge funds, and you're getting this real clash now between the retail momentum and the hedge fund momentum. And another thing I think that's moving into it is your standard kind of day trader is looking at this a little bit more and saying, God, this is so volatile that if I can get in $80 lower and I'm going to, if I want to move a quick couple grand even in a day, it's very doable. The problem with that is it is so volatile and no one really knows what is going on. And it kind of ties back into what I had mentioned earlier with the Federal Reserve Chair. That, for no reason at all, is going to have such a massive effect on the GameStop stock one way or the other. And I think as well, the stimulus package in the U.S. with the stimulus checks rolling out, I see a lot of people moving those into the market. You hear people talking about, I can get myself a nice 2 shares of Tesla right now. Well, maybe that's the play some people want to go with, but I'm sure there's going to be people looking at GameStop sitting around $200 right now and go, well, why the hell not? Let's get right back in this and see what happens. So, yes. I don't know if this story's going anywhere anytime soon, which is awesome. It's hilarious. It's a ton of fun, but it's just so difficult to gauge what is actually going to happen with GameStop because of all these different competing factors.
Sure. It's a meme unto itself, kind of like how Tesla's a meme for everything green and tech. And someone says, oh, I'm into green technology, I bought Tesla. It's like, well, yes, I'm a big fan of Elon, but no, there's a million other companies, not a million, but there's hundreds of other companies one could buy that would have far greater potential of making money than Tesla. But you touched on a couple of things there that are very important, and it's the volume and the volatility is something that traders like. To me, I get scared of that. I don't like it. It's too much. But in a normal, market, and a more realistic market, people think there's rational actors, and they can trade that a little bit different, especially when it's hedge fund versus hedge fund. But when you pick up a lot of retail that has the power that Wall Street Bets has, that throws a wrench into their modeling systems because of what we call an irrational investor. And it's very hard then to go, well, how am I supposed to predict how that person's going to act if I don't even know their criteria for success? And for some of them, it isn't necessarily, I just want to make money. And that throws the whole thing into a loop. I mean, usually people just assume, oh, they just want to make money. And a lot of these young people, it's not. It's that I just want these hedge funds to suffer because they bankrupted mom and dad back in 2008. Now, it may not be that specific hedge fund, but everyone remembers 2008, and pretty much everyone walked away from it with not even a pat on the wrist. It was just, hey, the taxpayer will pay for your losses. And it's things like that are not forgotten by people, even though the mainstream media doesn't want to talk about that narrative. That isn't forgotten by a large mass of population out there. And it is that kind of battle of the people versus the machine or the machinery. And it's always an interesting one. So I like both of those. But what I really am impressed by is that, say 5 years ago, 6 years ago, if there was a stimulus check coming out, I would have assumed everybody was just going to go buy a pair of sneakers and a new iPhone. Like something stupid like that. Like they'll be like, great, you're helping the economy. No, you're not helping the economy because both those companies are globalist companies. They're making, they're not even, some of these aren't even paying taxes in the U.S., some of these types of giant global companies. So you're not really helping drive anything. You're helping drive sales for one company. But now people are saying, hey, no, I'm getting my $1,400. I'm looking at the market. And now, even if they are looking at stocks that are wild and crazy, volatile and dangerous, if we can harness some of them to say, listen, go have your fun. I would never stop anyone from having fun, learn some lessons, but also put some of this towards companies that are real into solid management programs, then this is the time to do it. And I really feel a push that if we can get out there with your help, Austin, with the help of people watching, we can really harness a movement towards creating the things that everyone says they want, and pooling capital together towards real projects, real management, and real teams of people that are going to deliver the things that we want.
I think you're absolutely right on that. You summed it up so perfectly. And it's important to let people know, if you're interested in any of the stuff that we're talking about, feel free to get in touch with us. Our emails are on the website. Get at us on Twitter. We're happy to talk about this stuff. We love it for whatever reason. We're super into this stuff, and we seem to understand it relatively well. So we're happy to point people in the right direction.
No, I think, yes, and thank you for reminding that. Make sure you send to me or Austin an email. Check out the website, sign up. I always want people to keep getting notified when we're doing a show. We try to do a show Monday, Wednesday, Friday at 9 a.m. Time and time again. That's the plan. We just want to get out there and chat about things. If there's a company also that you're following that you want us to look at, we may not be able to look into it in depth, but we can certainly take a peek, see what they're up to, and see what they're doing, give it 2 cents worth very quickly. And I enjoy that. I mean, for me, I like looking up other companies I would normally never look at and see what's going on. And getting that feedback from people and chatting about things is great. That's how MVMD rolled across my plate. Was someone else reached out to me and said, "Hey, Andrew, take a look at this company. I know you like some of the companies in the space," and that turned out to be quite an interesting conversation. And once again, was able to reach out to another friend of mine, Brandon, who I didn't even know at the time was embedded with this company. Founders shares basically. So it's amazing how if someone brings something to the table and wants us to talk about it, who knows? I may know someone who was involved in that company at some point earlier as well. So reach out to us and keep getting notified. That's the best way to see if we can engage you further. Oh wait, we've got a quick update here too on Desert Mountain Energy. So we did do a little chat about Desert Mountain Energy, Logan. Lots happening there. They're hitting their milestones. The big push on that was Simply Wall Street had come out with a report this weekend. I want to say, I could be wrong, but I think it was this past weekend, and they had a very aggressive price target on it. And that has a huge distribution. I mean, I can reach some people, but this has, I believe, a couple 100,000 distribution in the US. And it had, once again, I'm not going to fall for it. I won't put a price target. They had stated that the company was about 90% undervalued. So they were looking for a very aggressive price rise in the company. And that has certainly not hurt the stock. I don't want it to grow and spike up at all. I have no interest in that happening. I want this thing to be chugging along as it is, as it's growing. We had a great talk with Mr. Rolfing 9 days ago, and we walked through some of the price scenarios with high-grade helium coming out at 7%, and what would it look like with this kind of volume. We talked, I had a bit of a chart that I put out there as maybe being conservative, so that we could chat about some numbers, and it was robust to say the least. So there's going to be a lot of news coming out there. We love the stock. This is a company. This isn't just a play. It's not a trade. It's not even an investment. We're building a company here, and that's how I look at a lot of the companies, including GasX. I look at these as being big company building situations. And if you're talking about building a company with the right management, right from infancy, and that's part of Robert and also Erwin Olian, who founded the company, is that you're putting together the right people, the right project, and you're building an entire company that is delivering, in this case, helium right to end users. And that is a huge undertaking. But when you're aiming for big and you're aiming for that kind of size, then also your growth expectation is quite high. And that's where I am at with this. So I don't want to keep on going on about Desert Mountain Energy because I love it to death, and I think people know it. I'm certainly not selling. I like the stock. And maybe we can just wrap up quickly, Austin, with QU Media.
Yeah, absolutely. QU Media is an extremely exciting stock. If people haven't had the chance to look into it, I highly recommend going and taking a peek at it. It's trading right around 30 cents right now. but they have some extremely promising setups that they're rolling out now. Their space is the social media and influencer market in India, and they are looking in at getting at the free channel subscriptions in India and growing their GRP, which is their gross rating points in India. Now, what gross rating points are, for those of you that don't really understand that space, gross rating points essentially equal ad revenue. The higher your gross rating points go, the more ad revenue you can pull in. They're a company that is aggressively targeting some awesome numbers as far as their GRP goes.
Yes, and why that matters is I think with their D Dish, which is a free platform, and we're going to do a whole video on QU because this is huge. Like if you're going to go after a market, China, I'm not, that's a tough market because it's a tough government. But you've got 1.4 billion people in India, and 650 million, I believe, are considered young adult or that young age group. They are very well aware of social media there. They are fairly tech savvy. Yes, there's a lot of poverty in India. Let's not pretend there isn't. The big concern with the growth in ad revenue and growth in advertising in India is skyrocketing. It's growing each year. If you look at any price chart, even if you just Google, give me a chart of what the expectation by 2027 growth of ad spend, it's huge. And of course, your Facebook, your Google, they're the number one drivers there. But when you're looking at the media component on still print, which is the Times of India, which also has a TV station as well, you're looking at the same names you're going to see in America as well. Like MTV India is owned by Viacom CBS. Bindass, which is a company out there, is owned by Disney. And also we have Sony Entertainment has, what's the name of that one? I can't remember. Sony and Samsung also, I believe, has a channel there. So you've got all the big names. There's all the big names. And jump in, Austin, if you remember the name of the company. I think Zoom is also.
The Samsung one's on the tip of my tongue, but I can't. It's there's a word in the Samsung TV, something like that.
Yes. And I think Zoom, not to be mistaken for Zoom phone calling or Zoom, there is Zoom, which is also the Times Group. The Times Group in India is ginormous. It's massive. So Free Dish, QU came out and they added 38 million homes in India. So yes, we're Canadian and we live in Vancouver. I live in Vancouver. Austin lives in Calgary. There's 36 million people in Canada. They just added 38 million homes, and once again, that's a huge number, and it's amazing. But a lot of people say, well, hold on, that's free TV. How much money do they really have? And that's a consideration. But we're looking at this company, once again, not to trade or just as an investment of 3 years out. How does this company look 3 years out whenever it's built out its platform, whenever it's got the eyes, whenever it has these ratings, and they're passing Disney, they're passing Viacom in ratings. What happens then? And we've come out of COVID, and the economy is booming once in India. And believe me, there are so many companies with high expectations in India to grow that country out, because once again, if you're a capitalist, you want people. You want to rise the people up so they'll spend more. There's 650 million young people. So if you energize and you motivate them and you drive them forward, that's a huge market in comparison to a small market like Canada. Yes, they have more disposable income. That's the one that you want to pay attention to. And that's what I love about this, is that you're starting in early and you have a chance to really see dynamic growth.
Yeah, absolutely. And just to touch on the Times of India's involvement in QU as well, that is so important because of the scale that the Times of India has, the scope that they can affect. You kind of touched on a little bit there, but two very key points on that. They have the Economic Times, which is essentially the Wall Street Journal of India. It's the largest financial newspaper in India. And then on top of that, the actual Times of India itself is the largest English-speaking publication in the world. It's the largest English-speaking publication in the world. So that's all that needs to be said about that. That is huge involvement. And you look at QU, it doesn't take long to look at Kurt and look at Scott and say that team is a hell of a team, and they're going to be able to do some awesome things.
Yes, and we'll hopefully have Kurt Marvis on soon. Lots happening there. I suspect there'll be so much more happening. And this is a company it's early stage, but once again, I've got a knack for knowing, these and luckily having enough people that I know that can point me in the right direction as well to say, listen, look at this team, look at this, look what they're up to. And you look at the management of QU Media, you look at the size and scope of the market, you look at the demand. I mean, these are all the basic economic things. I mean, this isn't rocket science. And you just think, is this the team? And is this the financial team? And is this the creative team? And let me remind you that we're talking about people from Sony, president from Sony. We're talking about VH1 and MTV. So we're talking about a great amount of expertise on that board and management to deliver, and we'll see huge things for that. Once again, this is not just an investment. This we'd see as being a big company builder.
Absolutely. Couldn't agree more with you on that. And the last thing to touch on with, again, kind of tying into that Times of India thing, is having a company like that involved with QU with a vested interest in its growth and how it's going to perform. It's a recipe for success.
Perfect. All right. Well, happy St. Patrick's Day again, Austin. It was a pleasure having you on. And everyone out there, thanks for joining us. Is there anything else you want to leave us with?
No, I think that's great. We'll leave any other tidbits of information I have for Friday morning.
Take care. Awesome. Well, thanks so much, Austin. Right. Enjoy your day.
Happy St. Patrick's Day. Take care.
Bye-bye.